Imagine a company so embedded in your life that every phone call, every internet connection, and every server that powers the cloud relies on its technology. Yet most people have never heard its name. That company is Broadcom. Today, we are going to uncover how Broadcom quietly dominates semiconductors and technology infrastructure, generating billions of dollars while staying mostly invisible to the public. This video will reveal how Broadcom makes money, the financial strategies that most people do not know, and the business lessons you can use to build your own empire. If you want deep insights into hidden financial powerhouses, subscribe to How Companies Make Money. Broadcom was founded in 1981 by Henry Samueli and Henry Nicholas. It began as a small semiconductor company in California. Their vision was clear: create high-performance analog and digital semiconductor solutions that could power emerging technologies like personal computers, networking equipment, and communications devices. From the start, they focused on technical excellence and innovation, creating chips that were faster, smaller, and more efficient than competitors. This technical edge would later allow Broadcom to dominate critical markets quietly, without needing a massive consumer brand presence. Most people think tech companies make money by selling products to consumers. Broadcom operates differently. Its revenue comes primarily from B2B, business-to-business, sales. Broadcom sells semiconductors, infrastructure software, and networking solutions to major technology companies, cloud providers, and telecommunications firms. For example, Broadcom components are inside your smartphone, your data center, and even your Wi-Fi router. Revenue streams include semiconductors for networking, broadband, and wireless devices, enterprise software licenses for mainframe and cloud infrastructure, custom ASICs, application-specific integrated circuits for major tech clients. Broadcom's model relies on long-term contracts and high-margin products, making its revenue more predictable and profitable than most tech companies. Broadcom became famous for its aggressive acquisition strategy. One major deal was the purchase of Brocade in 2017 for $5.9 billion. This allowed Broadcom to enter the enterprise networking market. Another monumental acquisition was CA Technologies in 2018 for $18.9 billion. By acquiring these companies, Broadcom expanded beyond hardware into high-margin software solutions. This combination of hardware and software creates an ecosystem lock-in, making it hard for clients to leave once they rely on Broadcom solutions. In 2022, Broadcom generated approximately $31.3 billion in revenue. Its semiconductor business accounted for nearly $20 billion, while infrastructure software contributed around $11 billion. The company maintains extremely high operating margins, often exceeding 50% in software and 35% in semiconductors. This profitability comes from selling critical components that clients cannot easily replace, controlling proprietary technology and patents, leveraging economies of scale across global production and software licensing. The lesson here is clear: build products or services that are essential and hard to substitute. Broadcom demonstrates several key business strategies. Technical excellence: products must be superior to competitors. Vertical integration: owning both hardware and software solutions increases control and profitability. Strategic acquisitions: buying companies to enter new markets or gain key technology. High-margin focus: prioritize contracts and products that yield long-term, stable profits. These strategies show how a company can quietly dominate a multi-billion-dollar industry without needing a consumer-facing brand. Broadcom operates in a highly competitive and regulated market. It faces challenges like supply chain disruptions, geopolitical tensions affecting semiconductor production, regulatory scrutiny on acquisitions and monopolistic practices, competition from companies like Intel, Qualcomm, and NVIDIA. Yet Broadcom has consistently adapted by diversifying its portfolio, securing long-term contracts, and investing heavily in R&D. Broadcom is betting on future technologies like 5G, cloud computing, and AI infrastructure. By supplying the chips and software that power these innovations, Broadcom positions itself to continue generating predictable, high-margin revenue. The company is also exploring more software acquisitions, shifting further into recurring revenue models. This approach ensures stability, growth, and resilience, even in volatile markets. Broadcom shows us that you do not need a consumer brand to dominate a market. B2B products can be more profitable than B2C. Technical excellence combined with strategic acquisitions creates long-term wealth. Predictable revenue streams are more valuable than flashy growth. If you want more deep dives into how companies really make money and the hidden strategies behind the world's most profitable corporations, subscribe to How Companies Make Money. Understanding these strategies could be the blueprint for your own business empire.